Imagine for a moment if you'd had the foresight, the sheer audacity, to invest just $100 into Bitcoin back in 2010, when it was still in its infancy, a mere blip on the radar of the financial world. Today, that single Benjamin could have transformed into a life-altering fortune, potentially making you a millionaire many times over. It's a staggering thought, isn't it? But this isn't just about luck, or a fortunate gamble that paid off. It's a potent symbol, a clear and undeniable sign of a much larger financial revolution that's currently unfolding before our very eyes. Bitcoin's rise, its improbable journey from a niche digital token, understood by only a handful of cypherpunks and tech enthusiasts, to a globally recognized and increasingly vital asset, has fundamentally upended the traditional ways we think about money, value, and the very nature of financial systems. Now, the landscape is shifting again, as the world's largest asset manager, a titan of traditional finance, BlackRock, the behemoth overseeing a staggering $10 trillion in assets under management, a sum that's almost incomprehensible, has officially entered the Bitcoin arena, signaling a new era of institutional adoption and mainstream acceptance. And let's be clear, this isn't some small, tentative experiment, a toe dipped cautiously into the water. BlackRock's strategic move into the Bitcoin space represents a seismic shift in the financial landscape, a fundamental realignment of power and perception. It's a powerful signal to the world, an undeniable declaration that Bitcoin is not a fleeting fad or a speculative bubble, but rather a technology and an asset class that is undeniably here to stay, with staying power. When a financial giant of BlackRock's magnitude embraces Bitcoin, throwing its considerable weight and resources behind it, it effectively serves as a green light, a resounding go signal for investors everywhere, from institutional players to everyday individuals. This isn't just about the simple act of buying Bitcoin and holding it. BlackRock is actively building the underlying infrastructure necessary to facilitate access for millions of people, enabling them to seamlessly access digital assets through familiar and trusted investment products like ETFs and other traditional financial instruments. The crucial bridge between the established world of traditional finance, with its legacy systems and entrenched institutions, and the dynamic, rapidly evolving new world of digital currency, is actively being constructed, brick by digital brick. And BlackRock, with its immense resources and global reach, is undeniably leading the way, charting a course for the future of finance. The unfolding story of Bitcoin and BlackRock is really just beginning. It's a narrative that's still being written, with many chapters yet to come. But its long-term impact on the financial world, on investment strategies, and on the very fabric of our economic systems will undoubtedly be felt for many years to come, creating ripple effects that extend far beyond the present moment. The convergence of old and new finance is now undeniably underway, a merging of two powerful currents that will reshape the financial landscape as we know it, and everyone, from seasoned investors to curious onlookers, should be paying close attention to this unfolding story, because it will impact us all. To truly grasp the magnitude of this moment and understand the profound impact it will have on the future of finance, you need to first understand BlackRock's sheer scale and influence in the global economy. It's not just another financial institution, it's a behemoth. Founded in 1988, BlackRock has risen to become the world's largest asset manager, a position it holds with considerable authority and responsibility. Its journey from a relatively small firm to a global powerhouse is a testament to its strategic vision and operational excellence. BlackRock is currently overseeing more than $10 trillion in assets. To put that into perspective, that's larger than the GDP of most countries. This immense financial power gives BlackRock a unique position in the global market. BlackRock's clients include pension funds, which are entrusted with the retirement savings of millions of people. They also manage assets for insurance companies, ensuring they can meet their obligations to policyholders, and even governments, entrusting BlackRock with managing their sovereign wealth and ensuring financial stability. With such a vast portfolio and diverse clientele, its decisions ripple across the globe, impacting markets and economies worldwide. Every investment decision, every strategic shift, is felt across the financial landscape. The firm's influence goes far beyond simple money management. It's deeply embedded in the very fabric of the financial system. Its technology, most notably the Aladdin platform, shapes how markets operate, providing risk analysis and investment strategies to countless other institutions. When BlackRock acts, markets move, often significantly. Its investment decisions can trigger rallies or downturns, highlighting its central role in the global economy. Its CEO, Larry Fink, is not just a corporate leader, he is one of the most influential voices in finance, regularly consulted by policymakers and business leaders around the world. BlackRock built its reputation on a foundation of stability and caution, prioritizing long-term growth and responsible investing. BlackRock is known for not chasing fleeting fads or speculative bubbles, preferring instead to focus on sustainable, value-driven investments. That's precisely why its recent embrace of Bitcoin is so incredibly significant. It's a signal that cannot be ignored. It signals a fundamental shift in how the financial elite, who have traditionally been skeptical of digital assets, now view and approach this emerging asset class. This isn't just another tech company or retail investor dipping their toes into crypto. It's the ultimate insider, the very embodiment of traditional finance, validating what was once considered the ultimate outsider, a rebel currency challenging the established order. For everyday investors, who may have been hesitant to invest in Bitcoin due to its perceived risk, BlackRock's move is a powerful de-risking event, providing a sense of security and legitimacy. This validation is opening the door for a new wave of capital to flow into the cryptocurrency market, potentially driving significant growth and innovation. Bitcoin has now passed the most rigorous institutional test, signaling its arrival as a legitimate and investable asset class. BlackRock's own CEO Larry Fink once called Bitcoin an index of money laundering. For a firm built on trust and compliance, the risks were too high. But this skepticism wasn't permanent. It reflected the immaturity of the asset and its ecosystem. The journey from dismissal to acceptance mirrors the broader shift in institutional attitudes. The wall of worry was built on real concerns about security and regulation. For BlackRock to change its mind, something fundamental had to change first.
Many in finance misunderstood Bitcoin's technology and questioned its value, calling it a bubble or even a fraud.
Not long ago, Bitcoin was dismissed as a tool for criminals and anarchists, shunned by mainstream finance. Its association with the dark web and lack of regulation made it untouchable for institutions like BlackRock. And of course, Bitcoin's performance has been impossible to ignore. Even a small allocation could have boosted portfolio returns. The combination of demand, infrastructure, and performance made Bitcoin too compelling for BlackRock to ignore. The perfect storm had arrived.
The macro environment, rising inflation and monetary stimulus, made Bitcoin's fixed supply attractive as digital gold.
The crypto market itself has matured, with regulated exchanges, custodians, and financial instruments making it safer for institutions.
BlackRock's clients, from pension funds to individuals, started asking for Bitcoin as a hedge against inflation and currency debasement.
So what changed BlackRock's mind? The answer? Client demand, market maturity, and a shifting economic landscape. The future of diversification is digital, and Bitcoin leads the way. BlackRock is making sure its clients aren't left behind.
By embracing Bitcoin, BlackRock is positioning itself and its clients at the forefront of this shift.
The financial world is digitizing, from NFTs to tokenized real estate.
For BlackRock, offering Bitcoin is about giving clients a strategic edge in a changing world.
It's not about replacing stocks or bonds, but enhancing the mix for better long-term outcomes.
Adding even a small amount of Bitcoin can improve risk-adjusted returns and reduce volatility.
Bitcoin's low correlation to traditional assets makes it a powerful tool for portfolio construction.
BlackRock's mission is to build resilient portfolios for millions of clients, always searching for new ways to diversify.
Diversification is the cornerstone of modern investing. Don't put all your eggs in one basket.
This progress gave BlackRock's legal teams the confidence to move forward. The regulatory fog began to lift, revealing a path for compliant Bitcoin products. With risks reduced and rewards rising, BlackRock seized the moment. The green light was finally on.
But regulators began to engage constructively, issuing guidance and proposing new rules for digital assets. The CFTC's recognition of Bitcoin as a commodity and the launch of regulated futures markets were game changers.
For years, unclear rules kept institutions out of crypto. The risk was simply too high.
For BlackRock, regulatory clarity was the final piece of the puzzle.
Imagine a surge, a powerful influx. This is how a tidal wave of new capital, a veritable ocean of investment, enters the Bitcoin market. It's not just a trickle, it's a flood, reshaping the landscape of digital finance as we know it. This influx promises to bring unprecedented liquidity and stability to the crypto space. The barriers are down, the gates are open, and the walls that once separated traditional finance from the digital frontier are crumbling, and the on-ramp is open. The path to Bitcoin investment is now smoother, wider, and more accessible than ever before, inviting a new wave of participants into the fold. The future of investing just got a lot more digital. It's a leap forward, a transformation that promises to democratize access to this groundbreaking asset class.
The ETF is the vehicle, the conduit that turns BlackRock's institutional validation, its stamp of approval, into reality for Main Street. It's bringing the power of institutional investment to the everyday investor, leveling the playing field and opening up new opportunities.
The launch of the iShares Bitcoin Trust, IBT, is a pivotal moment, is more than a product launch. It's a paradigm shift, a fundamental change in how we perceive and access digital assets. It's a bridge, a carefully constructed pathway connecting traditional finance to the exciting yet often intimidating world of digital assets. Now, retirement accounts, the cornerstone of long-term financial security, pension funds, the guardians of countless futures, and individuals can access Bitcoin through familiar channels, through the same platforms they use for stocks and bonds.
BlackRock's ETF proposal addressed SEC concerns head-on, with new surveillance agreements, showing regulatory leadership and paving the way for responsible innovation in the digital asset space.
For the average investor, the person on the street, this is a game changer, a pivotal moment that could reshape their investment strategies and financial futures. No more complex sign-ups or security worries. The barriers to entry have been significantly lowered, making Bitcoin accessible to a wider audience.
BlackRock's real innovation isn't just buying Bitcoin, anyone can do that. It's making it accessible to everyone through a spot Bitcoin ETF. It's about democratizing access to this asset class and empowering individuals to participate in the digital economy. An ETF lets investors buy Bitcoin exposure as easily as buying a stock, with the same ease and convenience they're accustomed to. Without the technical headaches of wallets or exchanges, it's a simplified, streamlined approach that removes the complexities and makes Bitcoin investing accessible to all.
BlackRock is now one of the architects of this future. The ripple effects will be felt for decades.
This isn't just about price. It's about building the infrastructure of a new financial system.
The entire crypto market is maturing, with more talent and capital flowing in.
BlackRock's demand for regulated services will spur innovation in custody, insurance, and analytics.
This could unlock massive new demand as companies diversify away from fiat currencies.
BlackRock's move also gives corporations cover to add Bitcoin to their balance sheets, normalizing what was once seen as radical.
The career risk has flipped. Now, not offering Bitcoin is the risky move for advisors and managers.
BlackRock's entry is a catalyst, forcing every major financial institution to reconsider its stance on Bitcoin.
The story of BlackRock and Bitcoin is a chapter in the evolution of money itself. The convergence of traditional and decentralized finance is here. Share your thoughts below and stay tuned for more on the digital future.
As we watch this unfold, consider how it will shape not just finance, but technology, business, and society.
This move brings institutional validation, opens the floodgates for new capital, and sets the stage for further innovation.
BlackRock isn't just chasing returns, it's building the bridge to the future of finance.
Market maturity, client demand, and regulatory clarity made this shift inevitable.
The journey from skepticism to leadership shows how much the world has changed.
BlackRock's embrace of Bitcoin marks the dawn of a new era. Digital assets are now a permanent part of global finance.